Warren Buffett said one day, "We simply attempt to be fearful when others are greedy and to be greedy only when others are fearful." And in today's episode, I want us to learn more about the stock price historical performance and future potential. So for the last time, please sit down, relax, and let's conclude our series about Hyliion. Hyliion, or ticker symbol HYLN. And by now, everyone knows that Hyliion's mission is to become a leading provider of electrified powertrain solutions. As a final recap of the previous videos, we should all have a common understanding of the main building blocks everyone needs to understand before moving to this final chapter. So if you've missed the first episode, click on the link right now. In this episode, we had a good overview of the company itself, the team behind it, the products, and the financial position. In the second episode, with the link appearing right now, so go check it out if you've missed it, we have unpacked the market in which Hyliion is evolving, also touched on the competition, current and future, and see how legislation is going to shape this industry and how Hyliion will benefit from it. And in this final episode, we will conclude this series with the stock itself, doing some high-level technical analysis as well as more fundamental analysis on the stock price prospects and trying to understand what opportunities lie ahead for current investors. And without further ado, let's talk about the stock. And the first thing I would like to do with you in this video is to have a little bit of a reflection first on what a stock is. I mean, fundamentally. The stock, and more precisely the stock price, is only a reflection of a sentiment towards a company. And that's why we often hear that the stock is not the company and vice versa. And we have seen so many times companies being undervalued or overvalued based on this overall sentiment towards a company. And that being said, let's have a look at a 2-year chart of Hyliion stock. So the first thing I would like to point out is that we had for some time a $10 price, which was to be able to buy the SPAC. At the time it was called Tortoise Acquisition, or SHLL, SHLL. And once the merger was announced, or should I say like the intent to merge with Hyliion was announced, we had our first impulsive waves. We went past the $25 and retraced back to about $18. So we've created, and we'll see that we've created the first touch on a key support, which was $18. Then we had our second impulsive waves, and this one was really interesting because we went up to the all-time high, which was about $58. And in October, when the real merger happened, so when SHLL became HYLN, we had the first collapse. We touched again the $18 and a few cents and formed, in this case, a last, not impulsive wave, but in this case, what we'll call it a shoulder. And what you can see here is a typical head and shoulder pattern. And then if we actually zoom on the, a year, yeah? If we zoom on the year chart, so you can still see the right shoulder on the left of the graph. Past that, we eventually broke the support and we traded for some time in between $15 and $18. Then we had the big announcement about the new batteries, the new modules, which would recharge in 8 minutes, which pushed us above the $18 resistance, but then very quickly retraced back again to the 15, broke down, and then we touched the floor, what we'll call as the floor as of today, which is about $7.78 I've got here, but around this target. We then had what I would qualify as a long head and shoulders. Now, not everyone will agree with that, but more interestingly, if you actually look at the RSI, you can see the 3 touch points on this head and shoulders. More interestingly, we formed a quadruple / triple bottom around the $7.7. But now if we zoom on the 1 month chart, we can see that we touched, just as of late, we touched a few times this support at 7.78, but then on the 11th, something like this, of October, we received a downgrade from UBS from $14 to $5, which some may say was a really interesting coincidence, and I will leave it to this, which obviously dropped the price of the stock and then slightly recovered since then. I guess the most important thing for us right now is that we are technically in uncharted territories, and unless we can reclaim back now the 7, or let's say 8 plus, and arguably the 10 plus, it is still hard to really know what the stock is going to do in the near future. Now, what I would like to do is give you a bit of, let's say we're going to take a step back. And if about a year ago, actually a year and a half, 2 years ago, you would have been invested in Shell or Tortoise Acquisition Corp, you would have paid about $10. And $10 for a SPAC. So again, a special purpose acquisition company, which basically is a company that doesn't have anything apart from cash and the intent to merge with another company. And you would have paid $10 for this. Like I said, the only thing you would have got from this at the time is the possibility for this SPAC to merge with Hyliion. And to be exactly truthful, at the time, or by the time we knew that Tortoise Acquisition wanted to merge with Hyliion, you would have paid a lot more for this. And probably you would have been actually lucky to pay less than $20 for one share. Now, in terms of Hyliion as a company, what we had was a hybrid V1 with different fleets, which was great at the time to have this in our pocket. We also had a Hypertruck ERX prototype, and I insist on this, that was a proof of concept, which was available, as well as 1,000 pre-orders from Agility. And let's call it a small team behind the company, which, don't get me wrong, is still the case as of today, but we'll talk about it just after. And I guess a little bit of an anecdote here that I want to share with you. So if we just go back briefly in time, and that was this head and shoulder I was mentioning before, the first one, the major one. In green you can see when the merger happened. Actually, just before that, like a few days before the merger happened, we had a little bit of a dip. And at the time, so I started to be invested in Hyliion probably slightly after the first shoulder. And then I've seen the stock climbing, the craziness. I mean, everyone that was invested in Hyliion at the time will remember that craziness in the market around SPACs. And I remember when it dropped kind of really aggressively just before the merger. And I remember so-called buying the dip at the time. And I was so proud of myself for buying the stock at around the $36. I think it was about $36 per share. Now, obviously, the rest is history, and you know that today, at a price below the $8, like paying $36 sounds absolutely crazy, but back in the time, I thought it was such a great buy. Anyways, that being said, as of today, if you actually invested in Hyliion, what would you get? I guess that's the important question. First, you get a share for less than $8. And like I said, like, you will get a share of a company, in this case obviously Hyliion, but not a share of a SPAC company, like of a true real company. Not only you have hybrid V1 with fleets, and arguably in this case more V1 being deployed as of today than it was back in the time, but also you have a new hybrid version, so the hybrid EX, that just launched about a month and a half ago. When it comes to a Hypertruck, now we're not talking about a prototype, but about a demonstration unit. And for some people, this difference may not sound like a big deal, but it actually is. A prototype would just be here as a proof of concept, pulling few technologies together to see if, in its essence, the product could work. But the demonstration unit is really here to fine-tune what the final product will be. And that's just itself a big difference. So not only we've got those demonstration units, should I say, that are coming, but also they're going to tour with the Hypertruck Innovation Council. And you should know that we already have big names in this council representing about 100,000 trucks. Besides, we don't have 1,000 pre-orders anymore, but 1,550 pre-orders, combined between Agility with the 1,000, originally disclosed, but also ANG with 250 and Detmar with 300 pre-orders. Also, we know that the Hypertruck is now eligible to generate ZEV credits, not only for OEMs, but also for fleets. And that in this long-haul market, there is no competition at this stage in terms of ZEV credits generation. On top of that, we've got a proprietary battery module or battery pack, which is capable to recharge in 8 minutes. And we have a partnership with an RNG supplier, in this case ANG, for discounted price and infrastructure development for future customers. So we know that for future Hyliion customers, if there is a need for a fueling station to be built next to them, ANG will be able to do the job. And finally, we also have a larger team with some industry heavyweight. Also, the company is part of the Russell 2000 and 3000 index. And finally, the company is on the verge of recognizing revenue. So really what I wanted to demonstrate here is that more than 2 years ago, you could have put $10 towards a SPAC with the possibility to merge with a specific company. But today, you can invest less than $8 for a share of a company that has made so much more progress since the early days. And now briefly, it's kind of hard to actually give you an insight on how much the company is worth. But I guess as of today, one key thing we can do is just look at the current market cap. So talking about 1.29 or less than 1.3 as of today when I am recording this video. And we know that we've got about $600 million worth of cash equivalent, short and long-term investment. Now, if we look at those two numbers, it gives us, and I'm cheating a little bit here, but a price to net cash of about 2.15. And what I'm saying I'm cheating a little bit is, I believe normally we don't use long-term investment for this calculation. But in this case, just to simplify everything, you know that every $2 that you invest in the company, $1 is backed by either cash or cash equivalent, short or long-term investment. Which means that the other dollar is going towards basically the enterprise value, which is made of the team behind the company, the products they have today on the market and the products to come, or the patents behind it. And I think it's pretty telling of the story of Hyliion as of today, which is really, in my opinion, undervalued. Let's have a look now at the stock ownership. We know that we've got about 173 million shares outstanding. And if we actually break it down into the key entities or people owning the stock, first we've got institutions. They are at the top of the chain as of today, with about 36% of the shares outstanding. Then behind that we've got insiders with about 29%, followed by retail investors with around 25%. Then mutual funds at about 7%, and finally ETFs at about 3%. Remember, ETFs are actually linked to the fact that now Hyliion is part of the Russell 2000 and 3000. When looking at the top 10 holders, first we've got Thomas Healy with about 20% of the overall company in terms of shares outstanding. Then we've got Jenkins Howard, who's actually part of a really wealthy family in the US, and he's one of the early investors in Hyliion, and he holds about 7% of the company. Then we've got a few institutions like Cole Capital Partners, the Vanguard Group, Flying G Management, BlackRock, Axioma Ventures, and Handelsbanken Founder, AB. All between 6% and 2%. Finally, we've got two ETFs with the Vanguard Total Stock Market Index Fund and the iShares Russell 2000 ETF. Interestingly enough, those top 10 holders have about 57% of the overall shares outstanding. So top 10 holders represents almost 60% of all the shares outstanding. Just something to bear in mind. And now what I would like to do is look at the future stock price opportunity. And I guess what is extremely important right here is to go back through a disclaimer. So the work I'm going to present is really based on a lot of different assumptions and unknowns. And therefore, this is not going to be a true representation of the business / stock performance, and this work itself is going to be reviewed and adjusted regularly. Do not use the following content as a piece of information that would influence your decision in investing or not. And don't listen to random people on YouTube, especially me, when it comes to your hard-earned money. So really to emphasize this is my own opinion, my own judgment. I have been consulting with other Hyliion investors to build this piece of work, but in the meantime I also stand by the figures personally, and I'm happy to defend them. I would encourage you to do the same work with your own assumptions, and hopefully the following will help you understand the process to go through when trying to assess the opportunity ahead of a business. And finally, a lot of information presented will also take into consideration the due diligence done about the company and the market presented in part 1 and 2, and therefore will not be emphasized again. So, we're going to look at 2022 and 3 different scenarios. The first one is going to be underperform. Now, just to be clear, those 3 scenarios are still bullish scenarios. I could easily go into a really bearish scenario where Hyliion is worth nothing. Okay, going down to 0, you lose everything. Or something kind of in between where, let's say, Hyliion is not going to 0, but the product is not accepted in the market, they're not selling, there's still something worth in terms of patents and technology, and they're being bought back. Here really we're looking at bullish scenarios, but underperform will be, let's say, 20% less revenue. Then you've got the baseline scenario and the outperform scenario, which would be about 30% more revenue. And really this is more kind of giving us a confidence interval around the baseline scenario. But this is still bullish. The second thing we need to take into consideration is the revenue streams. And here we've got 2 main ones, the hybrid being retrofit on your truck, as well as the ERX. From what we know, the manufacturer's suggested retail price, or MSRP, is going to be $29,000 for the hybrid system and $90,000 for the ERX. However, just here, as a quick note, the 75 miles ERX is probably going to be more between $100,000 and $120,000, but we'll keep an eye on this one. Then what we look at is the different regions where Hyliion is going to compete. Here, North America. First column is going to be the total addressable market, and we looked into this in previous episodes. Then we look at the units that we think are going to be sold for this specific year, and this in turn translates into the percentage total addressable market captured. At a baseline level, we expect Hyliion to sell for 2022 1,400 trucks, ERX being said, and about 1,900 hybrid systems. This is already about 50% less than the original baseline that Hyliion shared with us previously. So just to show you how conservative we are, and taking already some delays linked to supply chain issues, linked to everything else that would have delayed the progress of the company. When it comes to Europe, again, same structure, and here for 2022 we are not considering any sales, and same thing for the rest of the world, no sales being considered. And overall, by adding every single stream of revenue per region, we end up with the overall revenue in millions. And for the baseline, we're talking about $181 million of revenue as, again, an estimation. Then we're doing exactly the same thing for 2023. As you would expect, the sales price of the products are exactly the same. Now, when it comes to North America, and again, just looking at the baseline, we'll be talking about 5,000 units for the ERX, and same thing, 5,400 for the hybrid systems. No sales in Europe, no sales in the rest of the world. And that gives us our overall revenue for the baseline of about $600 million. 2024, similarly, no sales predicted for Europe and rest of the world. And for America, we are expecting 16,000 units for ERX being sold and 11,000 units for the hybrid, which in total equates to $1.7 billion of revenue for 2024. Now, from 2025 to 2030 onwards, what I want to emphasize, and this is also true as of today up to 2024, all the content that I'm presenting to you is a projection of what Hyliion can do, but is highly influenced by different factors. And I had to make some assumptions. And this is not limited to the pace of execution. So is Hyliion going to being able to execute, but at what pace are they going to be able to execute? The regulations around zero emission vehicles, not only in America, but across the globe. The rate of adoption from the fleets, and we touched a little bit when we talked about ZEV regulations, but again, this is only for California. So what about the rest of the world? The competitive landscape. We understand it as of today, but how is that going to evolve over the next decade? Another extremely important point is Hyliion's capability to integrate with OEMs. And to me, if there is one key factor that we need to look at, is this one. If Hyliion is not capable to integrate the technology with OEMs, the company is doomed to failure. Obviously, the successful launch of the products in different markets. Hyliion can be extremely successful in America, but not in the rest of the world. So we need to look at this too. And obviously any major market disruptions, being the market, the industry where Hyliion is evolving, as well as the overall market. We've seen already some disruptions around COVID and supply chain issues, but it can be anything else. So really, all of the above, as well as other factors, will have an impact on the predictions made in this video. And this could either have a negative or a positive impact on the numbers, by the way. It's not all about doom and gloom, can also have a better impact or positive impact on those numbers. And from my point of view, I will make sure to review the thesis on a regular basis in order to reflect any changes that would affect those predictions. I'm going to do this at least on a quarterly basis when it comes to numbers, and more deeply on a yearly basis for the longer term predictions. So by the way, don't forget to subscribe, turn on the bell notification if you want to know when the content is out, and that's a great way for you to support this channel, and it's free, so go for it. And the first thing I need to share with you is the long-term key assumption when it comes to the penetration for Hyliion in the Class 8 truck market. I came up with those figures through consultation with other Hyliion investors, and we believe that by 2030, Hyliion will be capable to reach about 23% market penetration in North America, 11% in Europe, and about 5% for the rest of the world. This is, by the way, talking about the ERX. Something to remember, this is not taking into consideration the growth of the Class 8 truck market year over year. Now, some estimations are saying that we may see something between 3 to 5% growth of this market year over year, which in a sense won't have a big impact if you're only looking at 2 to 3 years out. But when you start talking about 10 years out, from a compounding effect, can have a big influence on the numbers. But at this stage, we're not taking this into consideration. Also, I predict that the hybrid solution will be a mix between retrofits and brand new trucks. And I'm also expecting this solution to phase out depending on the markets at different stages. And this will also be influenced by the regulations in those regions, as well as the adoption of zero tailpipe emissions and the development of the infrastructure for BEVs and fuel cell EVs. Now, if we look at NAFTA market, again, based on the prediction 2030 and the original prediction from 2021 to 2024, we can define where we will expect the units sold per year to be for every single year. And I've done this for the Hypertruck as well as the hybrid. So we can see that the hybrid is going to eventually phase out around 2030, and the Hypertruck is going to continue growing with the market at around 2030 and past that. When it comes to Europe, same idea in terms of the growth of those two different markets, but in this case we're not expecting any sales before 2025, and then a continuous growth towards the different targets we've shared with you before. And similarly, in the rest of the world, we actually expect the hybrid to have more of an opportunity in terms of growth by 2030, but eventually to also phase out and the Hypertruck to keep its growth over time. And now, we're going to look in more depth into the financial statement. And if you've never seen that before, it might be a bit overwhelming. And don't worry, we're not going to go through every single line, but I want to give you a good idea of what we are looking for. If you are familiar with this, just pause the video if you want to have a look in more depth about every single line. On the left, you're going to have a description of what we're going to look at. The next column is the current financial year, in this case 2021. You can see that you've got Q1, Q2, Q3 and Q4. Q1 and Q2 are hard numbers. We know what it is. Past that, it's all going to be about estimations of what we believe the company is going to be able to achieve. And then on the right, you're going to have the full year, again from 2021 up to 2030. And again, this is based on estimations. The first rows we want to focus on is revenues. And we talked about revenues. Revenues is a combination of how many units you're going to sell and how much you're going to sell them for. So basically we've explained where this first row is coming from. And then the second assumptions that we've used is the gross margin. We use 20% for 2022 and we go up to 35% for 2026. Now 35% may sound a lot, and I guess only time will tell if Hyliion can achieve such gross margin. But something I haven't really mentioned before is that Hyliion's technology is heavily based on software. Of course, there is hardware that create the powertrain itself, but the famous secret sauce of Hyliion is the software behind, and that's what adds value to this overall hybrid system or ERX platform. And that's why we think that 35% is actually not totally out of the wood. Then past that, we're going to look at operating expenses, so being research and development or selling, general and administrative, so SG&A. And basically those expenses are derived from R&D percentage of revenue and SG&A percentage of revenue, which again have been defined based on our best understanding of the business and similar companies in the same industry. And all that is going to give you your operating income, GAAP, or core operating margin. Then if we move on, we're going to have EBITDA and core net income. First, we're going to look at depreciation and amortization in terms of percentage of revenue, as well as stock-based compensation. And this is going to give us our core EBITDA, including SBC, or adjusted core EBITDA, excluding SBC. And finally, just looking at different financial income or other income, as well as tax implications for the business. This is going to give us our net income GAAP and core net income. Again, if you need to go in more depth into this, pause the video and take the time you need. Then we're going to also look at the assets. So we talked about some of those, cash and equivalents, but also inventory or prepaid expenses and others, as well as short-term investments. We're going to add to this things like property, plants and equipments, long-term investments, and this is going to give us our total assets. And on the other hand, we're going to have different liabilities, so things like account payables, current portions of operating lease, accrued expenses and others, and things like long-term debt to give us our total liabilities. Finally, all of this is going to give us a chance to define our earnings per share. But first, what we need to do is estimate how many shares outstanding there is, or there would be, should I say. And once you've defined this, it's going to give you your estimated EPS, earnings per share. Now that we have all of this information, we can really go in depth into the stock price prediction. And this is where our journey begins. First, you're going to need a ratio. You're going to have to select a specific ratio to define how much the stock price should be. And what we know is by 2022, Hyliion is still going to be a really young company with high revenue growth potential. So the best way to actually estimate the value of the company and therefore the stock is by using, in my opinion, the price to sales ratio. You could also use the enterprise value to revenue ratio. But in this case, we're going to focus on the price to sales or PS ratio. And if we're doing a PS comparison, I believe that a PS ratio of 25 is actually a fair starting point. And by decreasing this PS ratio to about 15 by 2026 and keeping it at 15 until 2030, and when looking at those price to sales ratio, what you can see is you can have really extremely high price to sales ratio past 700, and really using 25 is lower than most of the price to sales ratio you can see here. So here, what you can see is a bunch of different ratios that you would normally use to evaluate a company. First, what we do is look at the enterprise value, and we are able to do this because we had all the breakdown before. Then you can calculate things like the trailing PE or the forward PE, as well as the PEG ratio, 5-year expected. Price to sales, we talked about it and we'll focus on this just after, as well as EV to revenue and EV to EBITDA. And again, we are capable of having those ratios because we've calculated everything, or estimated, should I say, everything before that. Like I've mentioned, in this example, we're only focusing on price to sales. Is that right? Probably not. But this is the baseline, the foundation we use, and then we'll keep updating. So we start at 25 price to sales ratio for 2022, decreasing year over year until reaching 15 by 2026, and keep it at 15 from 2026 to 2030. Now, to be clear, 15 for price to sales ratio is actually high. It is high if your company is not growing anymore. But here the assumption is that even by 2026, Hyliion will still be in a position to grow considerably over the years. Even though here we're only looking at two mainstream of revenues, being the hybrid product and the Hypertruck platform, I am expecting that by then we will still have a new product being launched in different industries, and probably that's something we'll touch about in future episodes. But again, everything you see here is my own opinion, is my own factors, and I encourage you to do exactly the same type of exercise with your own assumptions and your own understanding of the company, the market, and the stock price. Now we've got this, we can actually define a price target per shares. And yes, this is in dollars. And by continuing the logic, we can go back to a market cap by using the price target and the amount of shares outstanding that we've estimated just before. So here I am saying that I believe, based on my logic, my process, and my understanding of the business, that by 2030, Hyliion can reach close to 200 billion in market cap. And similarly, as you remember, the underperform scenario just considers 20% lower revenues compared to the baseline, and the outperform scenario considers 30% higher revenues compared to the baseline. We could have changed a lot of different factors too, being price to sales ratio, being the gross margin, being the expenses. But again, to keep it really nice and simple, underperform and outperform, and just a difference in terms of revenues, and everything else was kept exactly the same. And here it is. My price target for Hyliion over the next few years up to 2030, capable of reaching up to $1,000 per shares. Now, this may sound absolutely crazy. I get that. That's okay. What I wanted to share with you was more the process. And you can use this exact same process and modify it. If, for argument's sake, you think that by 2030, a price to sales ratio of $15 is crazy and something more around 5 price to sales ratio is correct, then just take those numbers and divide it by 3. Or if you think that 3 for a price to sales ratio is correct, then do exactly the same calculations. I wanted to share with you my vision and why I believe that Hyliion is indeed a diamond in the rough. So, to wrap up everything we've seen across those 3 episodes, we have a young company with a massive market to disrupt. I believe that this company is extremely well positioned in terms of product offering to actually disrupt this market. A stock which has great upside potential, and yes, still carries some risks like every single investment you will make. But in my opinion, the balance between the risk and rewards is far too much appealing. And a lot more to come. But let's keep it for future episodes about Hyliion. And so if you made it that far, thank you very much. I've been wanting to do those videos for a long time and start my channel. And only recently I found the opportunity to be able to do this with Hyliion and share the long hours of due diligence I've been doing with this company. Also a big shout out to the Discord group and lots of different great minds in this group. So if you want to join us, the link is in the description. It's free and this is a great community to share your experience, share your knowledge, share your understanding of Hyliion, and also stay up to date with everything that's happening. And because I always like to leave you with a nice quote, remember that to lose patience is to lose the battle. And this is from Gandhi.